Wednesday, August 2nd, 2017, Monaco 64, home of alternative economics and contrarian views. So it's 1:20 p.m. London or 8:20 Eastern Standard Time. This is basically the COMEX open for gold, the regular session open. I'm a little later today. I had to take Billy to the vets. He started yelping yesterday for no reason. And again this morning, so I took him to the vets, and I think he's just got a bad neck. He must have been running around in the garden and hurt himself or something, but he's got some pills to take, anti-inflammatory, so hopefully he'll be fine by next week. So gold right now, 1266.41 here on the COMEX open, down about $2. Overnight high is 1271 and the low 1264. Silver 1665, down 5. The overnight high was 1695 actually. I think it was right on the open late in New York. When the Project A or Globex reopens after the COMEX regular hour close, silver spiked to almost 17 and came back down. The overnight low has been 1656. In the stock market, the big news is Apple earnings. So the Dow rose above 22,000 overnight, the Dow futures on Apple earnings. Right now, let's see, the Dow futures is up 40 points, just around 22,000. So up 0.2%. S&P 2476 up 1 point only. The NASDAQ 100 futures is up 38 points or 2/3%. That's at 59.32. FTSE in the UK is down 1/3%. The dollar is still quite weak. The euro's rebounded this morning. We're at 118.30. We did get up to 118.69, but the dollar is kind of saved itself, so to speak, by being stronger against the yen. Dollar yen up 1/3% at 110.77. So the weak yen is helping the dollar index maintain some stability. The pound is stronger at 132.26. Dollar index overnight got down to 92.80. 79 has been the low. Right now we're at 92.98. It is a delayed quote though, but just below 93. I was reading something by Ron Rosen about the dollar on 321gold.com if you want to read it. And he's basically has the same level I have, 91. Well, he has 91.88 key support in the dollar index. I've got 91.91, so pretty much the same level. He thinks that if we break through that level, that will turn the stock market around down, and it will really move precious metals higher. He could be right. The other thing I noticed yesterday was Alan Greenspan was in the news saying that the biggest bubble is actually the bond bubble. I'm not surprised. I've spoken about the bond market being in the bubble. It's been a 36-year bubble since 1981. When interest rates are going to spike higher, I don't know. I think it's maybe when investors, hedge funds, speculators lose faith in central banks, because right now they're just riding that central banking QE policy by front running and buying government bonds ahead of the central banks. But if the central banks really come out and start unwinding their balance sheet, you could see front running the other way around. Or you could even see the other side of the coin, as central banks announce more QE, and investors, instead of front running, they throw their hands up and say, I don't trust central banks anymore. How are you going to unwind this if you do even more QE? So that's the other thing. The other thing I want to talk about, saw a comment in one of my videos. I think it was about gold, one of the videos about gold, and someone said, gold doesn't pay dividends, doesn't, pay interest. And someone said, if you'd been in the stock market, you would have done a lot better than gold. But the thing is, if you look at the Dow Jones Industrial Average back in the 1920s, I don't know what it was, 50 or 60. I'm not sure where it got to at the high. And now we're at 22,000. You'd say, wow, if you put, $100 in the Dow Jones Industrial Average back then, you'd have, $22,000 now. But one thing I would say, unless you're very wealthy, or unless, you have a banking, company looking after your fortune and always reinvesting your funds in the stock market and the indices for the last 80, 70 years, unless you have someone like that, all the companies that were in the Dow Industrial back in the 20s or even the 60s and 70s, a lot of them are not even on that index anymore. So actually, to keep an investment, for example, if you invest in the Dow 30 now, how do you manage it in the next 10, 20, 30 years? Companies come and go, but if you have a piece of if you have some silver coins, like my 1964 constitutional quarters, or if you have gold coins, or if you have jewelry even, you don't have to readjust for that. It's just money. And it's valuable now as much as it was 5,000 years ago, and it will be as valuable as it is now in 50 or 100 years from now. But by buying a mutual fund or a basket of stocks, is it really generational wealth? I don't think so. So I just wanted to put that through. The other thing that's going on this week is, of course, like we have in the beginning of every month, non-farm payroll in the U.S. or the U.S. jobs data. I personally think it's, the numbers that the markets and politicians look at, they're like really doctored numbers, statistics. They don't really look at the labor force participation. They don't look at the fact that there's almost 100 million people that could work that are not working. But despite that, we need to look at this because it moves the markets. So non-farm payroll is out on Friday. It's expected to come out, I think, let's see, non-farm, 180,000 hypothetical jobs, because they are hypothetical. They're not really, someone doesn't go out there and count, they estimate it. So 183,000, sorry, the 180,000 is private non-farm payroll. The previous number was 222,000. The unemployment rate that they look at, when they count very few people, they don't include those 100 million people. That's expected to drop from 4.4% to 4.3%. So we'll have to see how these numbers come out. But of course, on Wall Street and in the markets, revisions are also important. So keep an eye out for that 222,000 for last month. See if that is revised up or down. We had a number today. It's called the ADP employment number. And that's like a precursor to non-farm. And that was expected at 185,000. It came out at 178,000. So that was a bit weaker than expected. Let's see, there was a revision here. Let's see. Yeah, it was revised up actually from 158,000 in June to 191. So they revised it up. So all in all, I guess, the market took that as a good number, even though this month's the July number was a little lower than expected. What else? Zero hedge headlines. Let's have a look. Yeah, not much. You know, there's a story about the Dow rising above 22,000. You know, and that's about it. The Greenspan story was interesting about the bond bubble. He said, you know, the stock market isn't a bubble, but I tend to disagree with him because if interest rates start going up, long-term interest rates, and bond prices go down, that's going to affect the stock market because stock prices, they use the risk-free rate of return on 10-year U.S. Treasury notes to discount the price going forward. Oh yeah, the other thing I've been reading is how, you know, this talk of Carmageddon, which is basically how the, you know, auto loans are becoming sour in the U.S. and how the big car manufacturing companies are not doing as well. So that's something to look at as well. I think there's over $1 trillion, $1.2 trillion of car loans, and I think the average car loan for Americans is $29,000. That could spill over into mortgages and credit card debt. So that's the other thing out there. So as I leave here, now it's 1:30. Gold is 1267.50, so just down about 1. Silver's picking back up well. It's 1670, basically unchanged now. The Dow 22,003, up almost 50. Euro 118.36, up almost 1/3%. Dollar up against the yen 1/3%. So if you enjoyed this video, please like, share, subscribe to my channel if you haven't yet. Make a donation if you'd like. I've got links below in the description, and I'll talk to you later. Bye.